Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Hope everyone's having a great Memorial Day weekend in the United States. We have no legacy TradFi trading on Monday, which means no IBIT inflows on Monday. There's still plenty of coins that look great. Bitcoin looks great. I have no complaints. As long as we're above the cloud on trend, bullish TK cross on the daily, bullish 1050, those are all fair game in a bull trend, and that's where we're at. ETH, of course, got its first steps towards an eventual likely ETF. Some people wondering, why isn't it already trading? Well, there's more steps that need to be taken in order to get the ETF ready to go. The difference between Bitcoin's ETF cycle and ETH ETF cycle is that there was plenty of back and forth between the SEC and the ETF issuers before the BTC products launched, which is why they launched fairly quickly after the initial approval. For the ETH stuff, it's going to take a while. Nobody really knows. Is it weeks? Is it months? Don't know. But at the way ETH is moving, I would say it's almost better that the approvals just get extended as long as you can. Extend those approvals out 2 months. Nothing is more bullish than possibility. As soon as the actual flow numbers come in, it may be a different story. So keep that in mind. As much as everybody thinks they want an ETF, ask yourself, what do you think the flows will be and why? I don't have a good framework for why the flows would be extremely high on a relative basis to BTC, but all positive flows are great. You've also got the ET stuff to consider, the outflows for Grayscale. So crypto looks good. There's plenty of stuff that people are probably already trading that doesn't need my blessing to say, yeah, this looks good. Meme coins doing great. AI coins kind of pre-breakout, I would say. We'll take a look at those. Most alts that aren't the top 5, top 10, or meme coins aren't really doing anything. They're just ranging. They're going to be rotated into after the next breakout. BNB is pre-breakout. BTC is pre-breakout. ETH looks like it's ready for all-time highs in the next couple weeks here. And I think after that is when we see most of the other layer ones and whatever else sort of playing catch up. Like I said, Monday's a holiday on the legacy side. We've got 8 Fed speakers this week. We've got PCE on Friday. Not much else this week as far as numbers that could really tip the apple cart and make markets angry. We'll take a look at US and global liquidity. It's still ranging based on the TradingView metrics. Not necessarily what we want to see if we're bullish, but we'll take ranging over down, right? Ranging is totally fine. DXY also ranging. Speaking of ranging, maybe a head and shoulders there. I'll save most of the legacy charts for tomorrow. We get a day off anyway, so that way this video is not an 8-part mini series in length. But there is a potential head and shoulders on DXY. USD JPY is back at 157, which is greater than the last intervention. Not good for that pair, and potentially not good for yields, but yields in the meantime are heading lower, which is one reason why we have this uplift broadly in the markets. S&P, NASDAQ, NVIDIA all-time highs. IWM also, to me, does not look bullish at all, and commodities corrected quite a bit last week. As far as the BTC ETF flows, huge positive week, over $1 billion in inflows last week, and we're post-halving, so we don't need much to slowly just creep price higher, higher, higher. More coins coming off exchanges, less coins for sale, less coins being mined. So this is what we want to see. And it's going to be hard to keep price where it is if we have another 5 to 10 weeks of plus 1 billion in inflows. You know, there's just not that many coins for sale anymore. Definitely great that we've seen 2 billion in inflows in the past 2 weeks. Price barely going anywhere. Some people might say, well, that's a bearish divergence. I'd say, well, we're just refueling the rocket ship here. Cumulative net flows, 13.5 billion. There, of course, are going to be immediate comparisons to the ETH ETF when that launches. I highly doubt we will see the kind of flows for ETH initially. Over time, eventually, maybe, I don't know. Not that that's going to matter for price, which I think is going to like melt people's brains. It's possible that Sol could even outperform ETH. And Sol doesn't even have an ETF. I don't think that's going to happen anymore, but it's possible. So flows are not the end all be all for the relative strength, but they're definitely important, and certainly important for USD pairs. So it's good to see flows cranking. GBTC outflows have basically crawled to a complete halt, which is another reason why the inflows are so big. So that's very bullish for us. And it took about 18, 19 weeks for the GBTC flows to cease. That gives you a potential roadmap for ETH. Whether or not it's going to take that long, I don't know. We'll see. FTX has claims there. I'm sure other people that owe money to other people have claims there on the ETH side. So that will come out of ETH if it hasn't been sold already on the claim side. And if it has been sold on the claim side, it also probably comes out, right? That probably comes out eventually, especially now that the ETH discount has essentially closed to zero. Looking at all of the BTC holdings in the ETFs on a pie chart, IBIT has almost eclipsed Grayscale now. Fidelity still cranking. And then the others are basically the equivalent of less than one Fidelity. So the big important two are definitely IBIT and Fidelity. I don't think that's a surprise to anyone. The next question here is, will the new CEO for Grayscale do anything to this product? Will the mini ETF trust do anything for Grayscale? Will they continue to see outflows? Will they lower the fees? Will any of that matter? Those are obviously questions people are asking now that Sun and Shine is out at Grayscale. I'm going to talk about BNB in this video. I am very anti-exchange token. BNB historically has had a ton of regulatory risk, headline risk. The previous CEO, CZ, is in prison. All that being said, BNB continues to burn tokens. Your mileage may vary here price-wise, but the TA is pretty compelling. And the last burn was the biggest burn ever, notionally. I can't think that's insignificant. And if all these exchanges are seeing more volume and more users and everybody's coming back, that's certainly bullish for any exchange token or security. I'm not sure who uses BSC anymore. It's kind of out of my purview, out of my radar, but it looks good. We'll take a look. And then lastly here on the legacy side for PCE and core PCE, I added the two nowcast numbers to this chart. I don't think a hot PCE or a hot core PCE this week will necessarily be enough to kill a rally, but it could. And if it comes in hotter, much hotter than expected, that could be a problem. This is the Fed's preferred inflation gauge. You can see pre-COVID, we were ranging around 2%. We are now ranging around 2.5% to 3%. We're still likely headed in the right direction. Everyone's just wondering, does the Fed really want to raise here to squeeze the last mile back down to 2% and potentially risk crashing the economy? Now, based on liquidity, based on asset prices, I think we'd be just fine if they raised again. I think we'd see some bank failures, but you got to break some eggs when you make an omelet. You know what I'm saying? Before we go any further here, let me mention today's video sponsor, Kraken Pro. The Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced to professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. So it is a holiday week and we've been ranging quite a bit here. I don't expect too much on the Bitcoin side for Monday, at least not until maybe Monday night. Definitely Tuesday US Open is something worth paying attention to. ETH having a day here. We'll take a look at that chart further. A few alts doing very well. Pepe just continues to scream higher, a bit of a rising wedge on that. We'll take a look at that. So there are some things that are doing extremely well. Even ENS, of all things, up a little bit. The question I'm always asking is, okay, what is the risk of holding some of this stuff? What is the risk of some of this stuff going to zero, or some dev announcing that they're leaving, going to some other chain or something like that, right? That's what's not priced in for people when they're like, oh, you know, Pepe's up 10,000%. I don't need any BTC, or I don't need any less risk. Just add the risk, baby, add the risk. That's fine. Eventually, though, you run into issues and you learn your lesson and, you know, you shave the risk accordingly when you think it should be shaved. So there's definitely a yin and a yang there. Looking at the Bitcoin price since halving, We are in the black down here. We are 36 days out post-halving now. If this acts like 2012, which I don't think it will, even though it looks like it is, we will just continue to cook for the next 100 plus days from here. If we are more in line with 2016 and 2020 post-halving, we will probably range-ish for the next 50 to 100 days. Based on the price chart, I doubt we range for the next 50 to 100 days. So this cycle probably, fills the gap here and is somewhere in between all of these previous halvings because the chart looks quite good. Quarterly returns coming here at the end of May, still negative for BTC, positive finally for ETH. I think we can probably throw this quarterly returns chart out the window once the ETFs are here, but we'll see, at least for the ETH side. The monthly returns also unusually bullish for May. Usually we have this flipped. Usually April's bullish, May bearish, June somewhat mixed. In this seasonality definitely has been shifted, very likely because of the ETFs. Looking at a bunch of different coins, indices, stocks, the boomer stuff at the bottom, barely positive on the year, TLT negative on the year. This isn't total return. This doesn't include dividends and stuff like that or interest. But gold is actually beating the S&P, which I didn't realize year to date. This is all year to date, by the way. The graph looks strange. I couldn't adjust it on TradingView, but ETH finally outperforming BTC, 2x BTC, underperforming Doge, and Nvidia is actually underperforming MSTR. So kind of a weird, bizarre set of situations and circumstances here. MSTR is almost acting like a 3x BTC. And that just goes to show you that the NAV, premium to NAV or whatever, is just blowing out again. But everything here continues to look bullish to me. The issue maybe is liquidity, which is just, again, ranging US liquidity, Fed balance sheet minus TGA minus reverse repo, just ranging global liquidity in the green there, ranging. We may find it harder to keep moving up on the big stuff without a catalyst, unless we have some liquidity back in the system. It seems like the ETF flows have gotten the memo. They have continued in a big, big way. So maybe I'm overselling the importance of liquidity here. I think having that bump in liquidity would make prices rising even more certain relative to where we're sitting now. Looking at the power law corridor for BTC, we are gently nestled underneath the lower band there. If you measure the days it's taken to breach the midpoint in other post-halving periods, that would take us basically to Q4, sitting underneath this midpoint. I don't think that's going to happen. I think we're going to break out before Q4. But if we don't break out between now and Q3, then Q4 is extremely likely just based on the previous cycles. This goes back to the left or right translated, whatever translated. I don't really care. Again, this is going to be slightly different than every other cycle. Every cycle is slightly different. They're similar, but they're not the same. Power law corridor gives you a nice little maximum upper bound, probably we'll call it 350 on the chart. So we still look bullish on the power law corridor. Looking at a slightly adjusted pitchfork from the one I've been using. Pitchforks are just trend channels. Using these 3 points gives you an interesting resistance midline there because it has you selling off around when the ETF sold off and then us shooting to overbought when the afterburners got kicked on. So from a trend perspective, we're basically where we should be relative to the midline of the pitchfork. The 20-week moving average is right there. The yearly pivot 200-day moving average 53.7. And then the black swan 200-week moving average is at 35K. The first set of warning signs for trouble will be price starts to close below the midline of the pitchfork. Price starts to close back in the cloud. Price starts to close below the 20-week moving average. Price starts to close below the 200-day moving average. Those would be unexpected bearish reversals. Where we sit here is an expectation of bullish continuation. But it's always good to know where your supports are on the way down, should it happen. On the way up, if we maintain this rate of change, that gives us like almost a 125K by the end of the year. The bearish target would be the bottom of the pitchfork there at 89.7 by the end of the year. That's plus 30%. So as long as we can maintain this trajectory, it still gives us a plus 30% move from here till the end of the year. Is that going to happen? I don't know. Is that going to be tough? I don't know. But it's just, it's interesting. It's an interesting channel. Looking at the weekly cloud, I have no issues with this. We're flat on momentum. We're ranging. I think that's fine. No issues there. Just measuring the previous all-time high to low also gives you that 300K maximum target just blindly based on the previous bear market. We can overshoot, we can undershoot, but again, this is a pretty good estimation of where we might go. Call this a cup and handle, call this an inverted head and shoulders, call it whatever you want. It measures the same. And if we start to break out, that's where you'd expect a cycle high, a cycle top to be put in somewhere way up there. So weekly cloud looks good. Daily cloud, like I said, it's about as good as you can get. We tried to break down, had a nice chart pattern, had some numbers go our way, had NVIDIA earnings go our way, had a surprise ETH ETF go our way, and here we are back at 69. Now, if the ETF gets denied in the alternate timeline, I don't know if we're still here at 69, just based on the reaction that we had on the positive side. But then again, maybe you could argue, well, it was priced in. It was fully priced in as a denial. So what we got was a surprise to the upside. Even here, you're seeing a similar, NVIDIA had it. I'll take a look at that in a second. This like gross inverted head and shoulders argument for this whole thing. Cup and handle here. Declining volume profile. What we want to see here on new all-time highs is a strong push with volume. That would be preferable. You don't want to see us just sort of testing 74 or something on no volume. But this consolidation measures to 83.90. So that's potential in the next month, right? Everything looks bullish on trend. So all of these targets are going to be bullish. Again, what changes that? Closing below the cloud, closing in this case even below the yearly pivot, closing below the midpoint of the pitchfork, closing below the 20-week moving average, right? We don't close below the 20-week moving average in a bull market. It just doesn't happen. It hasn't happened historically. So if we start to get all the way down here, we're in trouble. It's not over. The pitchfork, the trend channel could save us, but I just say that because it sounds like I'm turbo uber bullish, and that's just what the trend looks like. The trend looks great. You've also got this case. I don't think it's a bull flag, but sure, why not? Let's call it a bull flag. Basically measures similarly to the previous chart. Again, you want an on-volume breakout there. So BTC looks good. I'm going to look at ETH, BNB, and SOL, and then I'm going to compare each of them to each other to get some sort of picture here. ETH is still in this broad pitchfork dating back since pre-COVID. It doesn't have a lot of life in the midpoint, which is maybe problematic. It doesn't have a lot of life at the upper or lower bounds other than recently, which may be problematic. So that's me just saying, well, this rate of change may not be real, but let's say it is real. That gives you a near-term target of new all-time highs pretty easily based on the rate of change. We can pull up the log curves. Those also look good. Midpoint there, I'll just call it 10K roughly. So ETH has certainly been undervalued based on people using it. Sorry, people in ETH land. No one's using it. People are using SOL. And without an ETF previously, nobody really cared about ETH. So this is what ETH needed to turn it around. Definitely, no question. Daily cloud, bullish. 1050 cross, bullish. Some mixture of something here, right? Some chart pattern nonsense. It's still got the old falling wedge. It's got cup and handle vibes. I don't know, right? It's just kind of a monster of a bunch of stuff. Just measuring the range easily gives you new all-time highs. Then the month, certainly possible. ETH BTC has bounced, 20, 25%, something like that from the bottom. It is still roughly bearish on trend, bearish on the cloud, bearish on the 100, 400 moving average, right? Some arbitrary moving average. The numbers here, what I'm using, doesn't matter as much as how has it looked over the past 2-3 years. It has struggled to hold highs and stay above the cloud. So is this bullish? Absolutely. Is it bullish on trend? I would argue no, not yet. It's getting there. It's trying to get there, but it's not yet bullish on trend. But it's made one heck of a bounce, that's for sure. SOL ETH had an ascending triangle, looked ready to go, and boom, ETF news hits. Huge reversal, right? You're now below the cloud on SOL ETH, and you have a bearish 1050 cross. This favors ETH over SOL, which makes sense. SOL doesn't have a pending ETF application, right? Now, if BlackRock comes out, I don't think they will. I don't think anybody will. But let's just say, for argument's sake, within the next 2 months, somebody comes out and says, we're going to file for Solana futures on the CME or something, right? We see some progress made on some other coin in the ETF front. Then I think we can speculate and say, yes, maybe eventually a Sol ETF or Doge or Ripple or whatever the heck they're doing next. But not a moment before that. This is very clearly in favor of ETH here, just based on the chart. This could change. This could get less bearish for Sol against ETH, but in the moment, it definitely favors a failed ascending triangle. BNB USD has done extremely well year to date. It's done very well with the cloud. It's done very well with the 1050 cross. It continues to consolidate in a super, super tight range here on the daily. Still very bullish. I haven't looked at this seriously with a wide aperture in a long time, but I did recently buy some BNB. Okay. Why did I buy some BNB? Well, this is why. It has consolidated for 3 months up here. The bad news appears to be behind it, and it appears as though it's ready for a break. I like that this is consolidating at the yearly pivot. I like that this triangle has continued to fill in. One word of caution here is with these triangles, if they go to the very tip, they usually fail. So what we definitely want to see here is a break above 625 on volume with a target in the 700s initially, but we may see strong trend continuation after that. I don't know. Against BTC, it's been quite a ranging mess, trying to get out of some high time frame cloud. Looks okay. Doesn't look amazing on trend, but it's trying to get there. That's against BTC. Against ETH, very much range bound. Certainly less bullish and more bearish in this case. Weekly cloud not really helping you out here per se. And I don't think BNB is getting an ETF anytime super soon. Sol BNB actually favors Sol with a pretty large cup and handle, I'd argue. It's above the weekly cloud as well. So it's important not to get analysis paralysis with all these. But I also think it's important to just take a look, take a gander. What do you see? Is there any like warning signs on the relative pairs? Because I'm guessing not a lot of people look at all these relative pairs when they're making trading decisions. Sol USD, again, it's got all these charts look very similar in that, is this a cup and handle on the daily? Is this some sort of inverted head and shoulders at the top like NVIDIA, right? Like very possible, very possible. Still looks fine. It's above the daily cloud. That's all you need to know. On the trend side of things, the opportunity is there for bullish continuation. My guess is what we're seeing is people, since the ETF, rotate out of Sol into ETH, and that has helped the Sol ETH ratio dive down even further. So those were probably the most important layer ones, I'd argue. You know, I'm sure somebody has some pet project where they like XYZ coin for whatever reason. But being top 10 by market cap really helps focus the market's attention on those specific names. On the AI side, NVIDIA, huge breakout, still has room based on the target. We talked about this last week, this like pseudo inverted head and shoulders. It was bullish on the cloud, bullish TK cross. So NVIDIA still looks fine. SMCI, bottom right here, looks less bullish, more neutral. And SMCI to me looks more like Fet Ocean Agix, whatever you say that, in this panel here. Near and Render look pretty similar to me, both fairly bullish. Near has had a multi-month inverted head and shoulders. Render has that similar, you know, what is this cup and handle? Like, what is this right up here? Certainly doesn't look bearish. And then are we even AIOZ? Similar charts as well. I don't know if it's fair to call those AI coins, but maybe they're trading like it. So I think in the moment, the AI focus, my read on that would be Near and Render over this other stuff. And then you've got the meme coins, which Pepe is just absolutely launching. Is that related to the ETH ETF? Maybe. I don't know. Like, are people scooping up ETH beta? Maybe. Doge, upper left panel there. Ranging, middling, had an inverted head and shoulders. Still looks okay on 12-hour. SHIB looks okay on the 12-hour. Bonk to me looks great. Very clearly multi-month inverted head and shoulders breakout. WIF looks okay. So SHIB, WIF, lag, Pepe, and Floki in the bottom right here. Floki also looks pretty good. And Doge definitely lagging most of these as well. Floki has a pretty long rising wedge that I'd definitely be careful of here. I don't think you could really argue anything other than this. but maybe. I don't know. I see this and I stay away every single time. Pepe up here also has a pretty aggressive low time frame rising wedge. May not matter, but just thought I'd point that out. Certainly got to be careful of charts that look like this because they can get angry in a hurry, even though at the moment it looks like Pepe looks, very, very bullish. Lastly here, I'll just compare Doge to all these charts because why not, right? Doge BTC ranging, certainly bearish. Doge BTC breaks out typically much after BTC halving. And I gotta wonder if having all of these meme coins on the table that are popular, that are visible, that are somewhat chain specific and tribal. Doge is obviously its own layer one. It's wrapped and put on all these other chains, but the meme coin space looks a little crowded here based on market caps. Certainly there are favorites in the market. The Solanas were a big favorite. So I don't really know. Does Doge just lag? Let me know in the comments what you think. Does Doge just lag the rest of the cycle? Is it all about the other stuff now? I don't know. So that's Doge BTC, Doge ETH ranging bearish, probably a low time frame. Head and shoulders there. Certainly more favorable for ETH. This was, I thought, an interesting one. Doge Sol, basically at all-time lows at the very bottom of the range. So if this breaks down, you got to think that Doge this cycle might just lag all of the Solana meme coins. Possible, based on this. Now, if this turns around and the market corrects itself, I'd expect top of the range or some diagonal resistance there. And lastly, Doge BNB in a pretty tight range, a little like coffee and maybe. I've got an alert at whatever level that is. But for the most part, Doge is not really it. Unfortunately for me, I have some Doge. So ETH obviously very strong. BTC very strong. I don't think the question is whether or not anything will outperform anything else or has outperformed anything else in the past. It's on the next move, on this upcoming move. Are you positioned and allocated? How you want to be positioned and allocated based on your estimation of the strength of those upcoming moves. That's how I'd think about it. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.